All right, all right, all right. Let's start the show with the correct mic. Let me get a good mic in here. All right, now this is going to be a good start.
Hello, everybody. Welcome back to another episode of Palantir Daily or Daily Palantir. We are live on July 3rd, the day before July 4th, and I hope you all are having a great day. Mr. Seymour Duck, Kane Frost with some not so frosty comments already in the chat. Tess Cap, hello Tess, thank you for being here. Notification got you this time, that's very good. Kimberly Yoon, Can Man, Austin, Richard, Broccoli Bob, of course. Hello, everybody. Now, we're going to do something interesting, okay? We're going to live stream this on Twitter Spaces because we have never done this on Twitter Spaces, and so that's what we're doing today. So I'm going to press start now on Twitter, and okay, it should be all right. Twitter, this is the first time I'm here on a Twitter Spaces. Usually I do these every day on YouTube, which is basically a Daily Palantir Shareholders Club stream. I know it's a long name, but it's a fun name. And today we're doing it on Twitter. So let me know if the mic quality sucks. If someone wants to go from YouTube to Twitter to check it out on Twitter Spaces, let me know how it feels. But it should be okay because I'm wearing headphones with a very good mic, I would imagine. So it should be fine. And everyone should be able to hear me. I think during the last 5 minutes of this or 10 minutes, I'm going to take Twitter questions. And we're going to see what it looks like from Twitter. So last 10 minutes, we'll take some questions on Twitter. Mac, I got your thumbs up. Perfect. All right. So Twitter is great. Audio is great. Financial Journey, thank you as well. Very cool. All right. So we're two places at once. Know what I'm talking about? That Drake line about, they twins, but I could tell they ass apart. That's basically what we're doing here. So we got Twitter and we got YouTube at the same time. Thank you all for being here. What happened to the Enovix podcast yesterday? We did it on the new channel, Finance Junkies. So if you type in Finance Junkies podcast on YouTube, Sunday we always do it on the new channel. It's a 2-hour-long episode, so you can check it out on the new channel. Okay, let's get into it. We got a lot to discuss. Again, last 10 minutes, we'll take questions from Twitter. This is the first time I'm doing this on Twitter Spaces, but I do a daily Palantir live stream every single day discussing the news in the world of Palantir because there is just so much news to discuss. All right, if you are on Twitter and you can't see what I'm wearing right now, I am wearing two gloves. So the comments in the YouTube chat are very interesting. Dual gloves, dual streams. That is also correct. And also, I mean business, bro. I kind of like these gloves because they expose your fingers a little bit and they cover they're obviously workout gloves. I just got done running 5 miles today. I was like, it's Monday. I'm going to get the week started correctly. Going to run, get into it, and we're going to keep going. All right. So the biggest news of the day. Well, there's a lot of big pieces of news in the world of Palantir, but one of the biggest news today that I thought was pretty interesting and I want to discuss is Snowflake. Now, I had a meeting with a guy over the weekend. It was a really good meeting. And it was with a guy who uses Foundry in his company. It's a pretty big company. And he walked me through kind of why Palantir is so transformational for him. And because he started using Palantir, and he's one of like the chief data guys in the operation of the company. And so that's why he reached out. He wanted to talk to me. He's obviously got some value from the content. So he thought he could shed some light on some things that were very specific from a data side. And I obviously took the meeting because I really wanted to know what it feels like from the inside of using the software. The only other technical person besides him that I talked to was CodeStrap. And CodeStrap is awesome, but obviously CodeStrap can't talk too much anymore in public. So this guy was able to just really explain to me in more detail. And what he was able to explain to me was really the transformational value of Palantir. And so when we started talking about Snowflake valuations, it was interesting because the dude was just like, I cannot believe people are willing to pay $60 billion for this company. And I feel like I've been on an island here. It's kind of, I mean, I know a lot of people have said this, but then I look at FinTwit, I look at the Twitter community, and I see all these people that are so excited about this company called Snowflake. And I'm like, goodness gracious, this is a $60 billion stock. Like, what are we doing here? 60 billion Dolores. Come on now. And so the guy that I was talking to over the weekend, he was basically saying the reason he has a lot of Palantir shares, I'm talking about a lot versus a lot of Snowflake shares, is because the reason Snowflake has 8,000 clients is because you can plug and put the software in your enterprise for like $20 a month. And he's like, that's great for growth. But in terms of overall value and transformation, and granted, this is specific to his company and the reason they're using Foundry, there might be so many unique edge cases and anomalies. But his overall point was from an investment perspective, he doesn't see sort of the upside in Snowflake. And even if you think Snowflake's a phenomenal company, phenomenal growth, I am asking for where is the alpha? Where is the upside? So today, what I saw today was incredibly interesting. What happened today was that the original VC and founder, Michael Spicer, I think they started Snowflake in around 2012, sold $90 million dollars worth of stock. And this was interesting to me. First of all, let me clarify. I do not care if the guy's selling a stock. I mean, like he's got to sell a stock. Everyone's got to sell your stock. People have to sell their shares. And yes, we'll talk about Palantir's insider selling. We'll discuss that as well. But 90 million is a pretty big number. He sold 500,000 shares. He went from 2 million shares to 1.5 million. So he sold out about 90 million of stock. And to me, this was interesting why he's doing it at this valuation. Now, I don't know if he was selling when it was in the 250s, 270s. I think that was early 2021. I'm pretty sure he was under a lockup period, so he couldn't do that. Again, I can double check that. But it's interesting why he's selling right now. So I started looking at some of the Snowflake's metrics. Everyone wants to criticize Palantir and their price to sales trading at 15, which, by the way, I think is also, kind of expensive given the growth rate only being at 18% year over year. Snowflake's at 25 price to sales. Now, Snowflake's growing above 50% year over year, which I understand, but you're paying 25 price to sales where the average software company, at least in like the SaaS enterprise space, what I saw today was about 15, 17. That's their average. People said today, oh, it's actually a 17 price to sales if you look at their total contract value that they've yet to recognize. Well, if that's the case, then we can bump up Palantir's, price to sales because they have $3.6 billion in remaining total contract value as well, right? So I'm not looking at the TCV. I'm just looking at the pure price to sales. Snowflake trades at 25 price to sales. The next big statistic here is that stock-based compensation increased by 53% in Q1 2023. Why is this important? Because if stock-based compensation is going up for a company, that means they're diluting you as a shareholder. Now, Palantir is very used to dilution. I mean, in 2020, 70% of revenue was stock-based compensation. Now it's more like 27.5%. It went down 30% year over year. Hopefully it goes down again 30% year over year. I don't know if they can guarantee that because hopefully if they're ramping up sales, it kind of goes down, but doesn't go down that dramatically, right? Because they're paying some more of their sales folk. But there is a downward trend to Palantir stock-based compensation where there's an upward trend to Snowflake stock-based compensation. So I'm looking at this, like, why is their stock-based compensation increasing? Well, one would argue further growth. And so let's dissect that for a second. Okay, you say it's further growth, and then Snowflake reduces their guidance for the overall year. They were supposed to do 2.71 billion. Now they're doing 2.61 billion. And so guidance is slowing down a little bit. Growth is still phenomenal, even though guidance is slowing down. Overall product revenue growth, a certain subsection of the revenue, has also declined, but stock-based compensation is going up. And then you look even deeper into their metrics, and 70% of revenues are spent on sales and marketing. So I kind of put the pieces together, and I'm like, okay, it's trading at 25 price of sales, $57 billion market cap. Stock-based compensation is increasing, and they're obviously paying the sales folks because you're not paying the tech people. They spent $150 million on a company to help them build generative AI applications for the enterprise. I put two and two together and I'm like, look, this company will definitely be around for the next decade. It's going to be an amazing, amazing, phenomenal company. But paying $56 billion, I don't know if that is the correct thing to do in a world in which you have something like a Palantir. Now, the counter argument to the Palantir, and we'll talk about their insider selling, is Palantir's growth sucks. I agree. So Q2 is going to determine everything. And, I could sound really dumb for saying Snowflake is a bad buy right now because Snowflake's growth might just smash it out of this water. This NVIDIA partnership might be phenomenal. The Neva acquisition might end up building truly amazing generative AI infrastructure for companies, which we know AI infrastructure matters, given Databricks spent $1.3 billion to buy a company that's primarily rooted in AI infrastructure. And they might kick it out of the park, right? They might do a really good job. The problem is Palantir's AI infrastructure product is already out into the market. Clients have already used it. They already hosted an entire freaking conference about the product. And the CEO, I keep saying this, says, we're getting 12 months worth of demand in 1 month. Either Alex Karp is lying or he's telling the truth. And I don't think Q2 determines if he's a liar or not. Q3 is going to really show us. Q2 is going to show us customer count, which will sort of point to the significance of what he's saying. Q3 will be recognized revenue, hopefully by then, or Q4. Customer count, land expands, land and expanded and scale. So we probably won't recognize the revenue. But if we get more customer count in Q2, maybe Karp's not lying. I don't think Karp's lying. I don't want to say, I don't think Karp's even been hyperbolic ever. I mean, Karp's main argument has been we are building products that people don't really understand. In the next 5 years, they will understand. And I think he's been more prophetic than hyperbolic. If you say you're getting 12x the amount of demand than you should be getting, as a shareholder, I take that and I'm like, okay, I don't think you would say that and then you would want to disappoint in the consecutive earnings by not living up to that demand. Because then that means you can't close the deal, and that's a product problem. It's not a sales problem. It's a product problem because it's inbound demand. It's one thing to get a client if you reach out to them and they say no. It's another thing when they reach out and you can't close them, because then that means you couldn't just get the deal done, and that means there's some problem with the product. So it's just really interesting to me to see the guy selling out of his Snowflake. Now, granted, again, he has to sell. He has to sell. I mean, people got to take some money off the table. The guy's probably been holding the stock for a very long time, but it is always unique when I think when you see insiders selling, and especially when some of these insiders sell a massive amount. I mean, $90 million is a lot of money. You know, it could have been 10 billion, it could have been 20 million, could have been 30, could have been 40, could have been 50, could have been 60, could have been 70, ended up being 90 million. That's almost $100 million of stock. And it's dumping it into the markets where people are able to buy it. Now, Brad Gerstner I think this is his top holding in his fund. I think his average is somewhere in like the 300s or some crazy thing. They were buying it at 400. He's been, up the wazoo about Snowflake, and he'll go on CNBC and pump it every day. But at the end of the day, the valuation is ridiculous. What, does it deserve to be at a 40 times price to sale for doing $2.4 billion in Probably not. And I think the CEO guy kind of recognizes that. So as a result of that, let's talk a little bit about Palantir insider selling. Now, Palantir insider selling has not been as egregious as Snowflake insider selling. The last sell from so first, before I talk about Carp, Sham and the CFOs and all those guys, the most I've seen them sell is 50 to 100,000 shares at a time, which is frankly nothing. I mean, they were selling 50,000 at $8. That's 400 grand. I'm like, okay, that's enough to, put a down payment on a nice little house in Colorado or whatever they're doing, right? So, I mean, those to me are relatively inconsequential. The counter argument to what I'm saying is, why aren't they buying in the open market? And I agree. I don't have the best argument for that. I wish they were buying a little bit more, because quite frankly, they should be buying if their stock was cheap. And the fact that they weren't buying is definitely not, it's definitely not the greatest thing I want to see as a shareholder. But are they unloading, like just absolutely unloading onto the market? Even if they're selling multiple times, are they selling a massive amount? I don't think that's happening. And especially in the context of Alex Karp. Alex Karp last sold 4 million shares, I think or 1 million shares at $15. 400,000 shares at $15. So he pocketed like 4 million bucks. This was the first sell Karp has done in the open market in the last 2 years, besides selling for options and options vesting. So every time he has sold for a vesting purpose. This was the first time, I think it was when the stock was at $15.40, like 2 weeks ago, he sold 400,000 shares, 4.3 million bucks, like just purely out into the market. Is that good? No, because that means at $15, he sees that the shit is a little bit overvalued. The question simply becomes, is growth going to be able to magnify $15 or basically show that $15 is not that great of a price there? Therefore, we don't need to magnify that big of a sale. 400,000 shares is 400,000 shares. But again, you've got to remember, Karp's a founder of the company. He owns about 4% of the stake. I think Peter Thiel owns about 3%. So they own about 7 to 8% of the company. So 400,000 shares, I mean, the guy has 62 million shares, right? I'm talking about Class A, not Class B. If you look at Class B, it's like 6.2 billion. It's like, you can do it either way. But it's, again, a relatively insignificant amount of your portion. This Snowflake dude sold 25% of his stake. That's 1/4 of your entire stake in the company. So to me, that signals a little bit more in the context of looking at both of those companies with Snowflake versus Palantir, versus just saying, oh, it's a founder, he's got to take some off the table. It's like, by all means, take some off the table, bro. But take, 50,000 shares, 40,000 shares, 100,000 shares. Do you need to take $90 million off the table? I mean, again, good for him, but that should signal something to a Snowflake shareholder at these prices. Again, maybe at 120, 130, it was a bargain, but at 170, 180, 190, I think the price is just a little bit too much. Let's go to some of the comments on YouTube, but those were kind of my core thoughts on the guy selling. Does it affect Palantir that much? Well, the only reason I bring this up, by the way, is not just the shit on Snowflake, but I had a really good call with this dude on Saturday. And when I asked him about Snowflake, he said the same typical stuff, like you can't really compare Snowflake and Palantir. They do different things, blah, 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 blah. But then it came down to valuation, because eventually you're going to compare them. When Databricks goes public, you're going to compare them because investors only have XYZ amount of dollars. So there's an opportunity cost to not being in Snowflake if you're in Palantir. There's an opportunity cost to not being in Databricks if you're in Snowflake. And so these things come up, especially if they're in the same space. So if they're in the same space and you're looking at the multiples and you're looking at kind of what you're ultimately paying for, his argument to me was like, I've worked in data for the past 10 years. I cannot imagine paying $57 billion for one share of that company, given he's seen the transformational value of Palantir in his organization versus kind of what a Snowflake can do. So that's the only reason I kind of brought it up. And when I saw the guy selling today, that's kind of reconfirmed to me, like, this is a hard company to justify buying right now. All right. Some of these comments. Amit out here hustling live stream right after his Uber Eats delivery shift ended. You're very funny, Tevis. You are very funny. You're a funny guy. Yo, if I ever did Uber Eats, bro, I might eat some of those fries, bro. I need to eat some of them damn fries, bro. You want me to deliver your food for 20 minutes in the car with those McDonald's fries and not let me take one of them, bro? Not one of them? Top executives could be 1 to 10 to 20 salary to equity ratio. Make little sense to buy since professionals will give more and more selling in the future. Yeah, I agree. That's a great argument for why, it doesn't make sense for founders to necessarily be buying their stock because they have so many options and so much vesting. And I think Shyam Sankar, I don't know if he's a founder of Palantir, but I know he has some very juicy options. So it really doesn't make that much sense to buy in the open market. Whereas someone like Anthony Noto, he's not the founder of SoFi. He's just the pretty figure on SoFi. And, if SoFi does a little bad, when SoFi dropped to $4, he threw in some money, which is chump change to him because he wanted to show that everything's okay, even though he's not a founder. So his conviction wasn't questioned as much as someone who has, shares for a long time. AIP's earnings impact will take time, but guidance, i.e. CARP signaling lead prospect growth and interest could maintain these multiples. $20 to $40 as a volatile range for 3 to 5 years with a 4 to 6x coming 2028 to 2033. Yeah, I agree. I mean, it all depends primarily on how well AIP is going to be able to grow. And none of us know. And that's why Q2 numbers in August are going to be incredibly important. I don't think we need to see massive revenue growth. I just think we need to see that I just think we need to see the customer count goes up. And if customer count goes up, then we're going to be fine. But if it doesn't go up, then it's not going to be the best. Chris says Shyam was the first FDE. He joined in 2008. Oh, wow. Damn, I didn't even know that. See, for everybody who says Chris doesn't you got to remember, Chris has Palantir in his blood. Even though he doesn't agree with the valuation right now, he has that damn company in his blood. Shyam, wow, I didn't know he was the first FDE. Well, it makes sense that he's the CTO. I always wonder, why did they make him the CTO? I didn't even know if he was that technical, but yeah, if you're the first FDE, that makes sense. Supposedly stole i2 from IBM and was sued by IBM and settled out of court. See, this is the type of due diligence that Chris does. I didn't even know that shit about Palantir. That's incredible. That's absolutely incredible. Yeah, I mean, I guess I got to research that. I didn't know that. Chris knows his Palantir, man. Chris knows his Palantir. Showcat, hello. Thank you for being here. For those that are joining on Twitter, this is the first time we're live streaming this on Twitter. And if you guys like it, then we'll do it every day. All right, let's go on to a new topic. Sampo Holdings. This is a company that is very interesting to me because they own a lot of Palantir. How much Palantir do they own? Well, this is a company in Japan. And if we look at their Fintel, they own 4.3% of Palantir. 4.3% of Palantir. They have 81,626,881 shares. They're one of the largest institutional shareholders of Palantir. So the float is 2 billion. They have about 81 million shares, about 4.3% ownership. The reason I wanted to talk about Sampo today is because the Financial Times did a piece. And, the Financial Times is a very interesting news company because they keep talking about Palantir. Every week, there's at least one article mentioning about Palantir. So I think as a mainstream media company, they're recognizing that there's a lot of interest in the world of Palantir. And so they're continually covering them. Basically, the piece was all about how Palantir is using big data to really change what's going on in Japan. So what's the biggest thing in Japan? This I learned today. 30% of the Japanese population is 65 or older. I mean, think about that for a second. 35%, 1 out of every, or 30% or 33, whatever it is, 1 out of every 3 people in Japan is 65 years old. I mean, if you want to live long, you go to Japan, right? Japan, they have a culture of caring for their elderly people and really making sure elderly people are respected. Now, the interesting thing is that even though they have a care for elderly people, they're missing about 650,000 people that are going to be able to help the workforce and take care of those elderly people. So this begs the question. If you've got to take care of all these elderly people, how do you take care of them if you don't have enough people in order to take care of the elderly people, right? Because there's just not that much of a workforce that can keep up with the rising population. That's where Palantir comes in. So the article I saw today was really interesting because the whole concept of Palantir was that essentially Sampo Holdings is a massive insurance company. And in that insurance company, they own a majority stake in a variety of nursing homes. And in these nursing homes, what they're doing underneath the beds, they're putting these sensors that track your heart, that track your sleep, that track basically a lot of different metrics that like Apple Health can track for you. And they're connecting it down to Foundry. And what they're doing, they're connecting it to Foundry, is they're basically trying to figure out, can we monitor a massive amount of patient data using sort of the physical hardware that they've created into the proprietary software that they built in conjunction with Palantir, leveraging Foundry, to be able to get better real-time awareness over what's going on. And the piece today just said that Palantir software is doing a really good job for them, and they're looking to expand to multiple different hospitals and multiple different nursing homes, which again brings up why I think Palantir is likely to get this NHS deal. The ability in real time to be able to do advanced data analytics to figure out how people are sleeping and then make actionable decisions on that is just incredible. And it's like software that I've never seen be able to do this before. So the example they pointed out in the article is that there was a man who wanted to go to sleep, and he was sleeping for 16 hours a day. And it's like, dude, why is this guy sleeping for 16 hours a day? And apparently they figured out the reason he was sleeping for 16 hours a day is because he was getting too much medical dosage. And so they were able to track back the dosage from his actual medicine because they had Foundry and make a positive correlation with more sleep. And as a result of that, simply be able to figure out that if we decrease his medicine dosage, he shouldn't be sleeping 16 hours a day, because no one should be sleeping 16 hours a day, to be honest. And as a result of that, that man was, had better health, and he wasn't sleeping 16 hours a day, and he was in a much better situation. You guys hear hissing? Why do you guys hear hissing today? That shouldn't be happening. All right, let me unplug this mic for a second, and let me make sure you don't hear hissing. Okay, you guys should be able to hear me now. You guys should be a lot better. Hopefully the hissing is gone, but that should be good. Let me know if the hissing is still there in the chat. So why is Sompo investing in Palantir? Now, I also found out they invested $500 million in Palantir in 2020. So they had about 107 million shares. They sold a little bit of those 107 million shares. So they got down to 81 million. So they reduced their stake by 24%, which makes sense. I mean, like, they probably sold when it was in the 20s and it was a good sell. But nonetheless, they still own 4.3% of the company. And so what it showed to me was, again, the diversity of one of the largest institutional companies, investment firms in Japan, investing almost in partnering with Palantir, seeing the partnership's results, deciding, hey, this is amazing. Let's put in $500 million into the company, and then we're going to keep 87 million shares. And they're still holding those shares today. Now, if they bought those shares at some decent prices early in the DPO, they're up 100% on that stake. And so the next, what is it? The next 3G form, what is it called? I'm blanking on what are those things called. 13G forms, 13F forms that are filed. We're going to be able to see, how bad the sell-off was, or how much they potentially loaded up. Because again, I think the run-up from 7 to 15 has not been retail at all. I think it was absolutely institutional ownership. And if it was institutional people coming in, then that's more likely than not companies like Sompo Holdings that have such conviction in Palantir. This is similar to what BP did, right? BP, after using them in 2021, was like, oh, let's buy 1% of the company for $443 million. Now they sold out their stake of the company a while ago, but the point is, you partner with Palantir, you see how unbelievably revolutionary that software is, and then you buy the crap out of them because you're a large institutional fund, and you're like, why don't we have a little bit of this company? Which is the exact same thing that Sompo did with Palantir. What a great way to end my day with your live stream at 3:37 a.m. Rice Cream, where are you? I think you told me a while ago, but I forgot. Where are you calling from? Let me know in the chat as well. Where are you watching this from? Are you on the toilet? Are you in the bed? Am I on your TV? Let me know, where are you watching and how are you watching? Twitter should have comments, and then you guys could show this on Twitter as well. But unfortunately, it's only on YouTube. Why hasn't Kathy bought more? Well, that's a good question. Why hasn't the Wood of Kathy's bought more stock? Quite frankly, Johnny Mac, I've been asking myself this question a lot as well. I have no idea. She's over here selling Tesla, buying Verve Therapeutics, fucking buying Roku. I have no idea. I have zero clue why she's not buying Palantir. I think they didn't expect the run up from 9 to 15 to happen so aggressively. And I mean, it happened pretty aggressively. And so then when it happened, I think they kind of felt like, man, there's no way we can load up at 15 right now. And then as a result of that, they weren't able to, get back in. They're probably waiting for a pullback, just like everyone is waiting for a little bit of a pullback. Granted, it's Kathy, and she doesn't wait for pullback; she just buys whenever she wants to buy. So, I guess we'll see what Kathy ends up doing. But I also don't know why Kathy's not buying. Netherlands, Toronto, eating at home, California, Midwest is at work, TV, California, SoCal. Okay, not bad. It seems like you guys are chilling. What's your goal for 2030, Amit? What net worth do you want to get to? I don't know about net worth per se. I calculated some of the plays I have in my portfolio, and if things go well, I think by 2025, the portfolio should be a lot healthier than, I don't want to say the exact number, but I think the portfolio should be in a much healthier situation than it is right now. So I'm looking to 2025 more so than 2030. I have no idea what's going to happen in 2030. I mean, we have no idea what's going to happen in Palantir, no idea what's going to happen in other stocks, no idea if I'm going to be alive or not. So quite frankly, I have no idea what I want my net worth to be. But I do want $737,000. Let me know if you guys get that reference. But I do want $737,000. Do you still own all your Palantir shares? Yes, that is correct. I still do. She probably saw Matt Money's comments, Palantir to zero and backed up. That's probably true. Matt was fucking tweeting, and the ARC guys were trying to find some Palantir due diligence, and instead of finding my tweets or Arnie's tweets, they find fucking Matt's tweets, and Matt's over here saying Palantir to zero, and they're like, man, this company's going to zero. And then boom, they sell out of it, or they decide not to buy because of Palantir. You're gonna be a millionaire in 2030, hopefully, bro. That'd be cool to be a millionaire. That'd be pretty cool. That'd be dope. I think it could happen earlier than 2030, but that's me being a little cocky. But let's see what happens. How much big of a percentage gain on wealth? If all goes well, I mean, I should be able to 3x, I think, the portfolio by 2025. And I hate even saying that because now it's probably not even going to fucking happen because I said it. But given the calculations I've done, I think it's possible, given some of the plays, to 3x the portfolio by 2025. Now, will it happen? I don't know. But I mean, if things go the way they need to go in 2024, then yeah, the portfolio will, well, that's before taxes. So probably like a 2.8x, 2.7x, because I forgot the fucking taxes. But yeah, if it happens, then hopefully that would be okay. Now, granted, the probability of that, I don't think the probability of that is low, because I think I was just calculating it today. I was like, it's actually very possible for this to happen. It's not that crazy. But we'll see. I mean, we'll see. Ultimately, it's got to be good. Cost based on Palantir is 15. Amit, tell us why you always say you need 700,000. Okay. It's Breaking Bad, bro. Walter White, that was his number. He needed $737,000 to quit being a meth cook. Only one person got that, and they DM'd me on Twitter like, I forgot your reference. And I'm like, thank you, you got the reference. It was Walter White, bro. Walter White, $737,000 is what he needed to quit. And then he started making $737,000 a day, and he said, you know what? Why would I quit? Because I'm raking it in. So, man, Breaking Bad, I've watched 5 times, the whole thing, over the past 10 years. It is the best show in human history, and no one can argue against it. Like, you can have your throne of games or whatever nonsense you want. You can have your Suits. What else do people say? I don't even know what other shows that are out there. There's not that many good shows other than Breaking Bad, bro. It is the best show of all time. It's just that simple. It is just that simple. Amit, I'll be honest. I think that it is very optimistic to think you can 100% CAGR. Well, I would agree. The only thing is, look, I'm in some options, right? I'm in 3 massive option plays. And the thing about these options is, Matt, I can even text you them afterwards so you can see the numbers. It's not that crazy to assume that the options do well if stock price, again, if you're investing in individual stocks, 100% CAGRing is really hard because all of those stocks have to do well. If you're in options on underlying assets that are incredibly undervalued and they go up, 30, 40%, your entire portfolio can go up multiple 100% because of the options arbitrage. So yeah, if I do the numbers, I think it legitimately can 3x by 2025. Now we'll see if this shit happens, then that'll be amazing. But if it doesn't, we'll see from there. But we'll see if it happens. Okay. Billions was pretty good. Yeah, I've never watched Billions. I've heard of it, but I just never watched Billions. Okay, let's go to the next piece of news that happened. Oh, by the way, finishing off on the Sompo, Palantir signed a $50 million expansion with Sompo Holdings in February 2023. So that was another thing that was really interesting. Palantir and Japan announced a $50 million 5-year expansion on its work with Sompo's Holdings. This expansion would enable the rollout of critical workflows across 10,000 salespeople with Sompo Japan, further developments of Sompo's real data platform, and many other critical growth opportunities across Sompo's Holdings. So Yeah, I mean, look, it's really important. Now, even in the press release, I didn't remember this. Foundry is used by hundreds of care staff across nearly 300 long-term care facilities to connect hundreds of recipient parameters into flexible and recipient-specific long-term care plans. This is a quote from Sampo. As Palantir's most important part in Japan, we, Sampo, will continue to expand our efforts in DX to include our own operational efficiency and profitability and creation of RDP by using Foundry. In parallel, Sampo will promote DX for Japanese companies, governmental agencies, and society through Palantir Technologies Japan, which was jointly established for Sampo and Palantir. Palantir did an acquisition of Palantir Technologies Japan for $44 million in Q4 of 2022, which got them the GAAP profitability. And then the next quarter, they actually got GAAP profitable from income from operations, which was $4 million, 17 million in net interest income. So, the idea that Sampo is now expanding them to Japanese companies, governmental agencies, and society, there's just so much room to grow in Japan. The question is just if Palantir is able to, be able to continue to get it. Okay, cool. So that was the core Palantir Sampo news. Now, the last bit of news I want to cover, and then in about 5 minutes, we'll get into Twitter questions. If anyone has any questions on Twitter, I'll open the mic and I'll put it on the microphone on YouTube so everyone can see. Man speaks so fast. You must be new here, smooth boy AD. You must be a little new here. All right, the Olin podcast. Let's talk about this. So I did a video on this later today. First of all, put in the chat if you listen to the Olin podcast, and if you're on Twitter, you can put a thumbs up. I'm looking at Twitter to see if you listen to the Olin podcast. Obviously, these guys are just phenomenal dudes when it comes to Silicon Valley tech, venture capital, business, right? These guys really know what they're talking about. It's one of those podcasts that you listen to it, and I do think you get a little bit smarter. Chamath Palihapitiya, Jason Calacanis, David Friedberg, and David Sachs. All four of these guys have constantly talked about companies in the AI data infrastructure space. And it feels like they're talking about Palantir every time they talk about them, but they're not talking about, like they're talking about Palantir, but they're not mentioning the word Palantir. And I always wonder why. And it's not just me. It's a lot of people that constantly reach out to me that are like, yo, have you listened to like 57 minutes to 58 to 1 hour and 3 minutes? Like, do you think they're talking about Palantir? And then when you listen to it, it's like, goodness gracious, these guys are talking about Palantir. Like, it's just so fucking obvious. And I think CodeStrap made it like a big thing 7 months ago when Chamath was talking about models in LLMs becoming commodities. And Chamath's entire point was the only thing that matters is the tooling that allows you to deploy a model inside of a company, because the model itself is meaningless, right? Like, anyone can train these models. Google can train them. Microsoft can train them. A bunch of these startups can train them. It's actually not as difficult as people think it is, which means the diversity in terms of the marketplace for you to pick a API to be able to run some type of NLP or AI or machine learning in the back end. It's actually not that difficult. It's becoming as similar to picking a cloud computing software like AWS, GCP, or Azure. And so when CodeStrap said models are a commodity, the implication there was that the only thing that matters is the proprietary data that a model is trained on. And in order to train that data on a proprietary model, or in order to train the model on the proprietary data, you need to have the tooling and the infrastructure. And that was CodeStrap's being 7 months ago being prophetic when it comes to Palantir. Well, on the Olin podcast this weekend, they were speaking about Databricks acquiring a company called Mosaic ML for $1.3 billion. And the entire point of acquiring that company was the next sort of leg that VCs are looking to, and these are the capital allocators. These are the guys that collect billions of dollars to deploy company money into these companies, is AI infrastructure, AI tooling. And you're listening to this and you're like, goodness gracious, how are they not even mentioning, oh yeah, Palantir is one of those companies? Like, not even a sliver of a mention that Palantir is one of the companies in this space. I don't think I've ever heard on that podcast. I think there's a search engine for that podcast too. If you were to just search up Palantir, I don't think it would show up in the transcripts. Maybe once or twice if they're like talking about Peter Thiel, but not in a significant way. And you think about, they're talking about these startups that are, not doing as much as Palantir is doing in the real world as a public company, and they're still not mentioning Palantir. And so my hypothesis, my tinfoil hat theory on this, okay, is that David Sachs owns a crap ton of shares of Palantir. That's what I think is happening. Why is that happening? Because I think David Sachs is very close to Peter Thiel. He's one of his friends when he started PayPal. And I think he owns a shit ton of Palantir, and he doesn't want to talk about it on the podcast out of a conflict of interest or just being seen as pumping the stock, because it is a public company. So, now they talk about public companies all the time, but Google, Microsoft, Amazon, you're not going to get shit for that. But maybe you would get some shit if you're talking about another company. So maybe the whole squad owns a crap ton of Palantir, but they don't want to mention it because their pod has massive influence. It's a top 20 podcast in the world. Or the second theory is the podcast owns it, but they're afraid of the political implications given that Palantir is still tied to this evil company and they don't want to be associated with that. And Jason Calacanis absolutely, I think, would rear away from that because he's a very savvy media guy. And if he doesn't think that the public likes it, he's known to kind of back away from some of those positions. Or maybe they don't care about Palantir. They don't know anything about Palantir and they don't give a shit about it. There are those three scenarios. I think the most likely one is they have some shares. They don't want to talk about it publicly out of just fear of, whatever they feel about talking about it. And as a result, they literally never bring it up. Because it's like incredible to just imagine never talking about one of the most innovative companies that I think exists on the stock market right now that's actually like showing like crazy, just crazy momentum. I mean, even the stock's up 150% and they're still not talking about it, but they're kind of referencing all of the same concepts that you would talk about in conjunction or in tangential relation to Palantir. So there is no shot they are unaware. Yeah, I agree. There's absolutely no shot they're unaware. The simple question is, why are they talking about it? Okay, so those are my three thoughts. So Twitter time. You guys can ask a question. Anyone can request to speak. If anyone has a question, I will let you speak and you can ask the question. We got 10 minutes left. And then I got Finance Junkies. We'll be talking about a lot on Finance Junkies. That'll be on YouTube. So if anyone wants to request to speak, you can do the request and you can come on stage. If not, that's totally fine. I'll keep going. Give you guys 30 seconds. If not, we'll take the YouTube questions and we'll go from there. He liked one of my tweets. Who are you talking about, David Sachs? Yeah. He hasn't. I gotta get Sachs to like one of my tweets, bro. I gotta just tweet at him. Some people were saying like, yo, if you just tweet at these guys, they might if you just tweet like, hey, what do you think about Palantir? They might just respond because they're so blunt on Twitter. But no ideas. No ideas. All right. Okay, cool. So Twitter again, if anyone wants to speak, you can request to be a speaker. If not, that's totally fine. And then we'll just keep going on the YouTube comments. Okay, so on YouTube, Kevin says, Sachs talked about some AI startup that was bought by Intel that we know we talked about. If you get the name of that and put in the chat, I'll like to hear. I actually don't remember him talking about that, but yeah, let me know. How do you know how many shares a company has outstanding? You just go on Fintel and Alpha Spread. There's a ton of websites. Palantir is about 2 billion shares outstanding. SoFi is about 959 million. So that's what we have. Okay, Sam, I see you requested on Twitter. I'm going to allow you to speak. First of all, I got to figure out how to do this. Oh, request. There you go. All right, I'm going to take my headphones out so the audience can hear it. And there we go. Okay. All right, Sam, you can talk and you are broadcasted to 232 people on YouTube as well.
You can hear me?
We can hear you.
All right. Quick question for you, and also ask the Finance Junkies guys this. With Tesla deliveries, right? Are they worried about the margins because the fact that they have cut prices on the vehicles? I think that's the question that I would like to ask.
Why do you think, so I agree that margins have been, and I'll ask the Finance, we'll talk about this today on the show, but I agree margins have come down, but I think it'll stabilize over a while, right? Or do you think that's something they're going to have to worry about for a long time in terms of margins? Because I feel like it was just a short-term thing they had to do, and eventually it'll get back to normal.
Yeah, no, I agree. I think what I'm worried about is not so in the long term. What I'm worried about with the margins, I think, is the fact that the rates are up. And I think for the next 2 quarters, the price fluctuation will keep happening because of the fact that the interest rates are so high. It takes money. It takes a lot to, borrow that much cash to buy that car. So I'm worried about the next 2 quarters. I think the long term, I have the same concept as you do. It's going to be fine. If the goal is 2030, I think we'll hit it. We'll hit whatever your price target is. I think the company is innovative. The leaders are innovative. But I think just in the short term, I think it'll be a little more rocky than I think people think, just because of the ability to borrow cash is going to be so high.
Yeah, 100%. No, I agree. I'll ask Carlos that on the podcast today, and I'm sure they'll definitely have some thoughts on everything going on with Tesla. So I'll make sure to ask them. All right, Sam, thank you for the question. I got someone else. Alex, I'm letting you speak, and you are live once it connects. Okay, you're good, Alex. You're still muted. You just got to unmute yourself, and then you can speak. Speak to your heart's desire. There you go.
My phone flipped horizontal orientation. The micro button ran away from me.
Yo, what accent is that? Is that a Ukrainian accent, a Russian accent?
Russian.
Russian.
You got it, yeah.
It was Russian. Okay, not bad. All right, what's your question?
Well, first of all, I want to say I appreciate what you do and what you do for the community. Thank you very much, Amit. You're, incredibly hard worker, and it's great value to the community. And then for Palantir, because this is a daily Palantir call, the price of the whatever stock is what it is, and it's fair or overvalue. That's fine. And to have perception of the company holistically, right? I'll get to my question soon, or whatever statement.
No, you're good. You're good. Take your time.
Holistically, new things need to, the company needs to offer something to the market that is in high demand, and then that will get recognized as such by investors, institutional and individual retail, so that it will be like a phase change in price. Because prices of talked too much about. We should really talk about market caps, but I can't even do that. I'm just thinking out loud. So my point is, how do you plan to because the content is shallow, like they say, thick and thin, right? So the content will be thin until something really big happens. So the main focus would be on speculation of how useful and how widespread the understanding of what Palantir is doing is for the next, 2 years worth of content, or even a shorter term, like a year's worth of content regarding Palantir. Because I'm not sure you're asked this question because you're generating content and it's hard.
Yeah, it's a great question. It's a great question. So basically, your question is, Amit, you're a content creator that is pretty much dedicating to making content on Palantir. How the hell do you come up with enough news if the stock is flat or it's like in the gutter, all that? It's not growing as much, right? That's the question. Yeah, I think that's a good question. That's a great question for the last 3 minutes, and then we'll head off to Finance Junkies. Look, I have a lot of thoughts on this, but my content creation journey has been in 10 years in the making. But when the stock was at 6 or 7. I realized the only company I really care about talking about was the company that I have a heavy position in, which is Palantir. And so the question then becomes, okay, if the stock's not rising, if it's not Tesla, right, which has every time Elon Musk farts, there's a new piece of fucking news, right? Like how do you create content? How do you create media out of that? And I think honestly, this comes down to creativity. Like to me, on the most mundane, boring days, I would look at a concept and I would come up with, how does this relate to Palantir? And then I would try to conceptualize, okay, what value could you offer in a video? For 10, 15 minutes, if you're going to keep people's attention, what are you going to say? Are you going to regurgitate the same nonsense, right? Are you actually going to bring something unique perspectives? And the deeper research I've done over the past 2 years has led me to go down this rabbit hole of just realizing there is so much to discuss. Like I literally have a notebook right here I'm showing on YouTube, and there's literally like 15 different ideas I was writing up today of just content for this week. Because I was just like, well, I could talk about this. I could talk about this in relationship to this, and this. You got all these different SPACs there. You just got so much to go through. So I think content is everywhere, especially with a company like Palantir. I do think if you picked a stock like Neo or something, it's not that easy to make content. But I think Tesla and Palantir gives you the opportunity, and then you just got to be creative to come up with content.
Noted, and that's awesome. And just let you know that having faith in a company that is hollow, it's very dangerous. But for me, it's very dense because of the knowledge that I have. I put my money where my mouth is, and same with you. And please keep up this great content that you produce. And it helps to educate a lot of layman people, because for people, technical knowledge and understanding, it's a no-brainer.
Yeah.
Thank you.
All right, Alex, thank you so much. Appreciate it. It means the world to me. All right, guys, that's it for the first Twitter Spaces on Daily Palantir. We'll do this every day. We're doing it every day. So it's now a live thing on Palantir. I waited 15 episodes to start on Twitter, but now it'll happen on Twitter. So I'm going to end it now. Thank you to everyone who joined. And if Twitter is your thing, then I'll be live on Twitter probably 9:15 every single day before Finance Junkies at 10 p.m., which I will tweet out a link to in a second. You guys can come join us there. And the night is still young. So we'll talk then. Thank you, everybody, for joining. I'll see you guys tomorrow. All right, YouTube, Finance Junkies. You know what to do. Get your popcorn, get your drinks. We got a lot to discuss. Tesla, deliveries, Coinbase, Bitcoin. I'll see you in a minute. Bye, guys. Thanks for joining.